Howdy, Jacob here. Today's company we'll be going over is British American Tobacco, ticker symbol BTI. So, as could be suspected, it's in the tobacco industry. What? Uh, but $72 billion market cap, $66 billion enterprise value. Okay, wow. Okay, so more cash on hand than debt on their balance sheet. That's pretty cool. Um, Not sure how that's the case since they have 19 billion in current assets and long-term debt of 46 billion. A crazy amount of other intangible assets. Oh man, without researching this, I don't know how I could even fathom going from 1 to $99 billion. Some sort of acquisition. All right. Okay, so looks like they issued debt to pay for that acquisition. Okay, that's fine. So to understand this balance sheet, I would need to do review on it because their tangible assets add up to 24 billion, and then their total liabilities of 94. So this 92 billion shareholder equity value is a bit interesting. Okay, so let's get into some things. So an 8.74% dividend yield. Holy smokeroos! Like they're paying out 6 billion, 6.3, 6.5, 5.9, 6.1, and they are making 12.3, 12 billion. Oh man! Even for a company this crazy, the payout over the last 4 years has been 40 to 50% payout, or 50 to 60% payout ratio, keeping 6 billion to, let's see, pay down a bit of debt. You can see here, pay down their share price or buy back shares pretty consistently. All right, so something like this, yeah, I don't know how or what they'd necessarily be investing in to get those returns. So it may make the most sense to just buy back shares that are cheap, um, increase that earnings per share, and then you don't know what else to do, so just give it back to the shareholder. That might make sense to me. So, industry like this, I mean, little growth, if any. I would say maybe declining growth, but then prices are going to go up with inflation. So, I might do something like 1 and 9. So, again, you might be confused why I'm doing a sub 10 price to earnings and free cash flow. And personally, that is because, um, I mean, one, they're paying out all of their money through, paying down debt, share repurchases, and debt. So there's no reinvestment. And two, a company like tobacco gets, from the market historically, gets treated a bit poorer to where it's not necessarily just based on numbers and the free cash flow of the business. Um, they never seem to get any premiums. So I'm putting a 9p there to say, if there's no growth, it should have a 10p, but because it's a tobacco company, taking it down to a 9 terminal p for a more conservative assumption. But man, type of business, these margins are just bonkers. 24% free cash flow of 34. Holy smokes! All right. I mean, it's been so consistent, really, outside of what was likely a super weird payment or payoff of goodwill, whatever it was. So, I mean, I'll do 24, 34. They bought back a little bit of shares recently, so let's just say they buy back 0.5% a year. Not bad. It's looking pretty close to a price that, with these assumptions, could yield a 15% return. Now, I mean, I said that dividend was pretty safe. Let's see what they've done historically. I mean, I might increase it 1% a year. We could do that. Say, you know what? They know this is a dividend stock. They know they can't get investments too large anywhere else. So let's just we make a little bit more money due to inflation and whatnot. Let's just give it back to the shareholder through dividends. So I think I think that's a reasonable assumption. And then yeah, so 15% drop to get to a 15% yield over the next 7 years with these assumptions. I know some people just see tobacco and refuse to invest in it. So, take that how you will. Don't do anything you're not comfortable with from a numbers perspective or especially from a conscious perspective. But, if you just view it as owning a business, and the business has been historically pretty consistent as this one has, and you don't mind that they sell tobacco, whatever, then definitely a potential stock company to put on your screener, and keep in the books for if it gets to a price that you guys do assumptions on, and it gets to a price that you feel comfortable with. So thank you so much, and have a great rest of your day.